Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo Artisans. It is Cowboy here, and it is July the 7th, starting a little bit late today, 8:45 a.m. EST. Apologies for the late start. Just had something else going on, and things happen. So here we are. Market opens in about 45 minutes, and it actually is a pretty quiet week, pretty quiet open, pretty quiet everything so far. But I'm looking at silver right now. You saw this yesterday if you watched the Monday morning video, right? I'm only taking trades on these, gold and silver and just about anything else, as long as they hit major structure points. That's what I care about right now. Silver, is it going to go up? Is it not going to go up? I mean, look, it's staying above 60. And from strictly a charting standpoint, I was pretty bearish on it last week, and it stayed double bottomed right at 56.82. So this has a double bottom right here. Okay. That being the case, I'm going to just take a quick look at the data. Right now, I don't think it's going to fall, at least like today. It might continue down, but there is a possibility that 55 was the low. But if not, then I had another move down as low as 45. So if price can stay above like 55 is the actual real number I'm concerned about. If price can stay above 55, then we should be able to not see it go to 45, because 45 is the next place it's going to go. Okay, 45 is the next market's going to go down to. All right. So that being the case, for now it seems pretty stable. Markets are pretty slow. If you watch the Monday update, then you would know that the markets are probably going to remain pretty slow. Okay. It's just that time of year. Plus, we had the Bank of Japan and their intervention. They had an ambush intervention last week that basically showed that they're willing to, in a very smart way, sell off dollars to buy yen, prop up the Japanese yen, which actually might cause a little bit of problems in the world equity market. The world equity markets. Why is that the case? Well, let's talk about it a little bit. And to make it really simple, I explain this in the newsletter. If you want to be in the newsletter that explains all this and links you to the weekly update, go into the description, get the free algo, and when you watch that video, it's going to give you the ability to get our weekly update, okay? Or just simply subscribe to the YouTube, and you'll be able to see it as well. But the algo actually gets you into the newsletter rather than just watching the video, where I explain a lot of what's going on in the bigger picture, the macro, why the markets are doing what they do. And it's been pretty accurate. Nothing is always correct, but what I do is I give the most likely scenarios, and they tend to play out to some accuracy. And in this particular case, there are 2 things that are going to keep the market very calm and sort of not wanting to spike up really hard right now. Thing number 1 is the fact that we are now in the summer. The summer is when things slow down. And there's an old saying, sell in May and go away. So if we were to take a look at the stock market, which is going to help push silver down as well, because everything is related by debt. If the stock market takes a hard hit downward, silver and gold will probably do the same thing at the same time in the short run. Now, in the long run, gold and silver have proven to be some pretty good safe havens, especially if you bought about 10 years ago. But in the near term, things tend to fall at the same time, okay? So when the Japanese yen gets strong, the markets tend to fall if it spikes. And the reason that is, it's the yen carry trade. And it's a relatively simple concept when you're in finance, but basically Japanese debt is what is used to prop up the world markets. So the Japanese print a bunch of very cheap debt. They trade that debt for, maybe like stocks in the US market. And then what happens is, as the yen is protected, those stocks have to get sold off because the debt that's underpinning those stocks gets immediately devalued. So they have to sell those stocks because they have to recollateralize. They have to add to margin. Okay. So long story short, when you print new debt at a higher rate, the previous debt is worth less money. The value of that prior debt goes down. Right? At that point, that debt is effectively collateral for the entire world's stock markets. Collateral is usually it's in this particular case, it's a form of margin, meaning that you have to have a certain amount of ownership in the whole picture, right? In the entire, I'm going to borrow this amount of money to put into stocks picture, you have to own a certain amount of what you borrowed. Well, when your collateral gets shrunken, when your collateral becomes weaker, you have to add more money to keep that trade alive. And where's that money going to come from? It's going to come from them selling stocks. They're either going to sell stocks to just liquidate the position and not have to recollateralize. They're not going to, they don't want to put more money towards that, or that's going to be a negative feedback loop because the trade that they were in as a result of that carry trade, that trade becomes less valuable. So this is a sense where people are going to sell off to either get the money that they need to recapitalize, recollateralize, or they're going to sell out because they want to get out of the trade because it's selling out, and everybody sells and it sparks a big sell-off. And this is why debt and too much debt is a problem. Well, the Bank of Japan, they need to protect their currency because their economy is being damaged by the fact that they keep printing this cheap debt to keep this whole game going. So the Japanese are going to step in and protect their currency. And the easiest, or I should say the simplest way, is to hike their debt. But hiking their interest rates, I mean to say, hiking the interest rates is going to severely damage the world's collateral and stock markets. But they can have a short-term solution by simply buying lots of Japanese yen, and they sell off US treasuries in order to do so. And that props up the USDJPY pair, and that's what happened last week. And the Bank of Japan has done a lot of this in the last month or two. And I think they also hiked their rate. Now, they talked about not hiking it again until the fall, but we don't know how that's going to work out. They just hired their new deputy, I don't know exactly his position, but basically he's a bigwig there at the BOJ who actually did the big sell-off last week. And he waited until just the right time to spike the Japanese yen. And that's going to put pressure on all the markets. And even gold and silver that are known as safe havens are going to take a hit because gold and silver still operate in the debt world. A lot of the gold and silver trade are paper trades. So if, let's just say, the Bank of Japan hikes their rate again towards the end of this month, whenever they do it, it might be beginning of next month, I'll have to look in the calendar, that could not only force the stock market down like the NASDAQ that I follow, but gold and silver could take a hit too. But I can tell you just from a charting standpoint, from an algorithmic standpoint, what I've drawn is more or less what we can expect unless we get a surprise, where it's going to kind of grind at least sideways. It might go up a little bit. I don't expect a whole lot of upside. And the whole market is so quiet because, one, it's the summertime. Two, we have the carry trade scenario where it's probably just going to bounce around inside of a range. And the range right now appears to be at the top, $71, which I don't even know if we're going to see that. It could just reject here at $67, very easily reject there. Might not even make it there. Or it'll come down to 55 and would have to see how it behaves at 55. But the Bank of Japan right now is the linchpin. And what all markets are going to do, all risk assets, so Bitcoin, stocks, precious metals, anything that you trade against the dollar, anything you use dollars to buy, those are at risk as long as Japan starts to shift towards a tighter monetary policy or a like a higher interest rate, tighter fiscal policy as well. So that's what we're looking at for now, though. At least this week, outside of any surprises, I expect silver to go sideways and maybe slightly bullish, with 71 being the highest I expect it to go and 67 being a local top. And that was a long explanation. It's what we have time for. I will edit this video. I will have edited, so a lot of the stuff at the beginning will be gone. But I do appreciate everybody watching today. We're going to go ahead and take a look at some other stuff with the Private Live Lab, right? So we got a bunch of guys at the Private Live Lab, guys and gals, who will have questions on, what stock, what's my stock going to do? What's my precious metals going to do? What have you? And then, of course, I coach people, right? I teach people how to build their own trading algo. So if you want to be a trader, if you want to learn how to develop maybe like a side income, some people end up just trading as their entire income. It takes time though, right? So anybody who says, use my method, you'll be rich in like 4 weeks, like, okay, you're probably going to fail. Just do this and you can have the life of your dreams. You're probably going to fail. This is something that takes time and effort to learn if you want to do it right. And everybody wants to do agentic AI trading. They want to have the robot trade for them and not think. And to you, I say, good luck. Actually, you can do this. It's doable, but you have to tell the robot what to do. And that's your trading algo. That trading algo is the heart and soul, the engine to your AI agentic trading bot. We teach you how to do that stuff. And there's a free algo where you see an example of me doing it. Now you have to optimize that algo if you care to trade with it. You don't just plug it into your exchange, but we show you how all that stuff is done as far as creating an algo. We show you tools the traders use to plug it into their exchange and trade for them. If you want to optimize the algo, you want to build your own algo, which I highly recommend, then come on to algofactory.tech. Just go in the description, watch the video. Yeah, Papa Giorgio. Papa Giorgio's like, are you saying I can't get rich quick? Yeah, we're gonna flip $28 into $40,000 like you're talking about. So funny X post is like, oh man, I gotta flip $28 into like 4,000 so I don't have to go to work on Monday. Good luck with that. No, this is something just like anything else. You gotta basically go to school. You have to basically learn how to do it. And for the average like forex trader, it's 4 years until you're profitable. But we can actually make that happen much, much more quickly. You just got to have discipline. And we do the rest for you. So thanks for watching. AlgoFactory.tech, learn how to trade like a hedge fund pro. And we'll be back tomorrow. And we expect to start at the usual time. I'm usually very punctual. Today is an exception. Thank you all for sticking with me.
Join us or die.
Just kidding. You're not going to die. We love you.